Welcome back. The market still doing well, slightly off the highs. Advanced decline still very strong at 4:1. But let's see if it sustains. Let's address the space of the moment, which is fertilizers. The government has introduced new packaging rules for fertilizer companies, where they now need to ensure that 2/3 of the fertilizer bag use the Bharat logo. This leaves 1/3 of the bag space open for corporate branding. K.S. Raju, Chairman at Fertilizer Association of India, is now joining us. Mr. Raju, hi, good morning. Thanks for joining us. So, is this official? Is this official now? And what's your reaction? Because for a lot of companies, this takes away their sort of branding power. So, what would be your view?
Yes, this has been now introduced. The order has been passed that they shall be followed in the following manner. But this didn't happen, in the last few days. There's been a dialogue with the industry, with the ministry, over a period of time. And it was felt that since the government is subsidizing in a very, very significant manner urea and, of course, all of the fertilizers, government felt that this should be known to the public, to the farmers who are using the fertilizers. The government is indeed supporting, like so many other schemes that the government is giving. Whereas hitherto, which is the company's brand and it is being sold, it is a relationship with the company and the distributors and the farmers, and it is going like that. So, but the real knowledge or understanding of the farmers, of the kind of support, significant support coming from the government was not there. Some people knew about it, but so there has been a dialogue between the government and the industry, and it is felt that the public should know, the farmer should know.
Mr. Raju, industry, I'm assuming, and you would have the feedback from companies, would not be too pleased, right? I mean, this does take away brand differentiation, etc. What's the feedback really?
Well, we discussed this as well. For decades together, every company built its brands to differentiate between one another. But eventually, if you go to the bottom line, is that urea is urea. It's made by us, Nagarjuna made by somebody else, and so is with DAP and the NPKs. So there's no really product differentiation; it's only the brand differentiation. And yes, we spend a lot of time and effort and money over so many decades. It is in that sense, we will not be able to differentiate as much. However, with the government, it is a bilateral discussion. We agreed that we will go this way, and it has gone on a mutually agreeable basis. So this should be implemented like that.
Will there be enough time, though, to make the transition? And in case a company is unable to do that, will there be some kind of penalty?
There will be more of a printing of a bag, really. Printing of a bag. So printing in the old way, they print it the new way. Standardization. I don't think it will be done very quickly. There should be no issue.
Did you get the feedback that they'll have to? By the way, could you tell us what are marketing costs for fertilizer companies as a percentage of sales? I mean, would you have those kind of numbers? Will they have to spend more in other ways because the product itself will carry lesser of the branding now?
Not really. If you look at let's look at the major segments in the fertilizers. Urea is one, phosphorus is another, and SSP is another, the third. Now, urea, we are as a country, we are still a deficient country. We're still importing a lot of urea, and every product that's made in the country is sold. It's more of a distribution, really. We don't have a real struggle to sell our product and market our product and do market development. But there is a little bit here and there, but primarily it's a matter of distribution more than real marketing. And marketing expense is very, very insignificant in that sense. So we don't see any issue about the products getting absorbed in the market. In any case, the farmers and the dealers will get used to it very quickly. It's always going to be. Everybody's going to do the same thing. And surely every company's brand is there, though in a shorter format. It will be there, and that networks and the distribution, everything will go. Okay. So in a distributed model, really, there should not be major impact here.
Mr. Raju, a word on, now let's move away from this topic, on the sector itself, because a lot of these companies are facing pressure in terms of gas prices. So if you could tell us how's that looking and if there's enough supply for the sector.
Gas prices, yes, in the last several months, because of the Ukraine crisis, that there has been a significant spike in the price of gas, and therefore, in a lot of our urea production in particular, we import a lot of LNG, and LNG prices have gone through the roof. It is beyond any of our expectations. So, but there's a higher demand on a working capital, surely. But the government reimburses, even if it's a higher cost, it reimburses that incremental cost and is covered under the subsidy arrangement. So at the end of the day, if you take over a 12-month period, yes, this is a matter of concern for the country. The whole subsidy bill is going up significantly. Working capital demand on the industry is surely there, but it gets reimbursed. There is a problem of supplies.
Even if it gets reimbursed, there is this whole problem of supply, as you just pointed out, right? Wanted to ask you, is there enough supply to the sector now? Or is that a big concern?
Last few months, there has been some short supply, given the issues around the Ukraine-Russian war battle, and the curtailment of supplies have increased the LNG prices significantly. Number two is that the sanctions and so on have affected the supply as well. So there is a move to reduce the supply to at least to make do with at least 10 to 15% of the supplies.
Mr. Raju,
for a short while, until things improve.
Right.
Yes, supply has been an issue, and all of us are feeling the pinch.
What about that is gas? We're talking about gas, but there is also the issue of potash, etc. Right? Because of plants overseas, ammonia. How does that impact the Indian fertilizer scene? Briefly?
Yes, overall, all imports, ammonia production capacities have come down in Europe, given the lesser availability of gas. And ammonia is imported into India to make phosphates, and potash is also imported, and phosphates are also imported. So, yes, there has been some impact. Prices have gone up in all these areas.
But for companies, it doesn't make. But for companies, I mean, there is not, their equation does not change, right? Because the government, they go to the government, they ask for more, prices have gone up, you got to subsidize more, and the government takes a call. So the equation for companies does not change, right?
Not as much, yes.
Okay, got that.
Mr. Raju, we'll leave it there today. Thanks a lot for joining us. So that's Fertilizer Association of India. The market, by the way, is once again trying to get back towards the intraday highs. Not quite there yet, but a lot of stocks doing well. BEL has really been one of the big stocks of the last few days, and that's up another 3.5%. There's some gains in Hindustan Aeronautics. What a massive mover it's been for last 1 month or so. Bank of Baroda has been doing well. Canpin Homes. Kotak Mahindra Bank is making a huge comeback today, 2.5% higher on that stock. So a lot of these stocks doing well. Shrikant Chauhan is back with us for some fresh trades. Shrikant, been a good first hour. Your thoughts and your calls now?
Yeah. Good morning, Anuj. Good morning, Prashant. I think, one thing is very clear that the markets are in between of the entire range. And today we are going to see stock-specific activity. And again, we started seeing the activity in those companies where there is a lot of momentum, like defense-related stocks. They are doing really well. In that, I think HL is currently trading at 2280, but we are expecting stock to move towards the levels of 2400. So it's a buy even at current levels with a stop loss at 2250. The other stock which we like is Bharat Dynamics. Here also we saw some multiple bottom sort of formation around 818, 815. There also we are expecting 850 or 870 sort of levels. And apart from that, if we go through with few metal companies, then today there is specific activity. And in that, Vedanta is really looking good. It is around 271, 272. So from here, the stock can go to the levels of 290, 295, where it has ultimate resistance. So Vedanta is also a buy at current levels with a stop loss at 265.
Okay, thanks a lot for that. Well, one space that is buzzing for a while now is the banking space. Especially PSU banks have been doing quite well. Ashwini Kumar Tiwari, who's the MD, International Banking Technology and Subsidiaries at SBI, joins us now to discuss an outlook on the business. Mr. Tiwari, good morning and thanks a lot for joining us. Credit growth is back, definitely. But is it coming in with higher risk? Can you give us, just to kickstart the interview, a synopsis of what's going on with the banking industry at the moment. What kind of credit growth are we looking at?
Yes, so as you know that for us, we grew about 15% last quarter, but the banking sector itself has been growing in this range between 10 to 15%. Some banks more than 15 and some slightly short. But overall, compared to the last year, the growth is pretty good. And therefore, as you're rightly saying, credit growth has come back. Now, to your point on whether the risk has increased, I don't think so. In fact, I would argue that the pricing of the risk, which was a concern in the quarter 3 and 4 of last year when people were chasing good assets and quoting very low prices, that has been corrected to some extent, because the bond market again is not giving very good prices to a lot of companies, and they are coming back to banks. So this is another trend. Similarly, the foreign forex loans, which were very, very popular earlier for the lower cost, that has also gone up in cost. So people are now preferring domestic loans and the corporates are coming back to banks. So that is a new trend we have seen the last couple of quarters. And that is what is pushing this growth apart from retail, which continues to grow well.
Just had a follow-up there because, we've talked about growth, but I also want to talk a little bit about what's happening on the asset quality side. For the sector as a whole, PSU banks, asset quality has definitely improved, especially in quarter 1. The net NPA ratio of PSU banks is now less than 2% for the first time, I think, in the last 30 quarters. What do you see as the way forward as far as asset quality? Will these trends continue to improve? And I'm asking more with respect to, the recoveries and upgrades that have been quite healthy this quarter around.
Yes, so the asset quality improvement has been a secular trend for the last several quarters. I think starting from 2020 onwards, we have seen an absolute reduction in the NPAs. So while slippages have been happening at a lower pace, but because of recoveries, because of upgrades, etc., the overall reduction in the NPA has been absolute and percentage both. And that's why you see the number you quoted, below 2% net NPA. And for us, we are below 4% gross and about 1% net. So that's very, very good for us as well. And what we are seeing is 2-3 things here. One is that the legacy book of NPAs, which were there for a long time, the late 2000s and the early 2010-11, those NPAs, when they were created, and they were recognized in a bulk in about 2016-17, especially when the AQR came in. And after that, the banks have been trying to recover and settle, and this process has now come to its final lap. And therefore, what you see now is some big tickets still remaining, but largely at the resolution end. And secondly, what is happening is the banks have tightened up their risk management, and as a result, now they are much more careful in giving loans on projections which may not bear out and which seem to be very positive. So, combination of risk management tightening and the limits tightening, and also the fact that the earlier recovery for the last struggle of the last 5 years is now in the final round. Both of these have led to this situation, and I guess this is going to continue.
Mr. Tiwari, the last quarter numbers met street expectations. By the way, those are shots of the listing, it's a good listing. It was expected to be a good listing. Sirma is the company which has made it to the market. Is essentially in the same, not in the same exact space like Dixon, Amber, etc., but similar. And we'll have the management with us later. 27% higher on day one. The numbers in terms of subscription, etc., were super strong, and it's kind of responded in the way that you would expect to the subscription numbers. A lot of demand for that one. So 281 is where it is at, as compared to I think 225 or so where they sold stock at. So we'll come back to that in a bit. Mr. Tiwari, thanks for waiting. Just a quick bit. Q1 numbers met expectations, but before that, for 5, 6, 7 quarters, SBI made it a habit of beating expectations, analyst expectations, by a wide margin. Is the pace of improvement broadly going to kind of slow down now, or what should we expect? Yes.
So our numbers will be good, and we'll actually, while I don't comment on what the street expectations are, I think from our own standards and what the targets we set for ourselves, we'll do better, because this quarter 1, as you're well aware, the major outlier factor for us, which slightly pulled down our net profit, was the mark-to-market provisions we made, and that's a large number for us. And going forward, because the interest rate hikes, some of that is still to happen or may happen. So therefore, there will be some more impact. But I think we have done the bulk of it. And here on, from Q2 onwards, I think our results should be aligned to whatever targets we set for ourselves. And hopefully, they will beat the street expectations as well.
Okay. Resolutions have slowed down a bit, Mr. Tiwari. Why is that? Why has the pace of resolution slowed down? And how many cases at SBI do you expect to see resolutions for by the end of FY23?
No, resolutions pace has not fallen or not slowed down. These are like the remaining larger ones. They take time to resolve, and there are multiple iterations, multiple challenges in the courts, in the NCLT, etc. So these happen when they happen, and therefore, for example, we had a large recovery in a power asset last month, rather earlier this month, and that's the outcome of the last 2 years of effort. So there were many assets like this, which are in final stages, and they may take a couple months more. But my sense is that the forward movement in other resolutions is continuing, and we will see good recoveries as we go forward as well.
Just to, I don't know if you gave a number, but would net interest margins in 23 be better than 22?
Yes, they should be, because as the interest rates are rising, generally the way it happens is that the loan and since our loan book is now quite a bit of it is connected to the external benchmark, and both external benchmark and the MCLR both have risen in response to the hikes. I think the net interest margin to that extent will rise because the deposit catches up with a lag. So therefore, initially there'll be a pickup, and over time it will obviously settle down to the usual numbers we've been having, which is between 3 to 3.5. That's the number we've been having.
All right. Thank you very much, sir, for joining us. Good speaking with you, and good luck. So that's the management of State Bank of India with some perspective, some outlook on the business. The markets, I mean, staying pat, still about 40 points off the day's high, the first hour high, 122, 17,643. We'll take a quick break here. We are back. Jay Kale is going to be with us to run us through.
Back. One news piece that we're going to focus on now is what's happening in the auto space. Eicher Motors has seen another resignation. In fact, this time the CFO of Eicher Motors has resigned. And this comes on the back of multiple resignations that the company has seen over the past 1.5 years, especially at Royal Enfield. There was a mass exodus in August of 2021 after Vinod Dasari stepped down as the CEO of Royal Enfield. Post that, Lalit Malik, Shubhranshu Singh, Vimal Sumbli all retired back-to-back, or rather resigned back-to-back. And now you have the CFO Kaleeswaran Arunachalam also resigning. What does this mean for the company in general? The stock in any case has been hitting new highs. Jay Kale, Senior Vice President Research at Elara Capital, joins in now. Jay, good morning. The stock is not reflecting any kind of nervousness or pressure, right? I mean, the business is doing well. Royal Enfield sales are growing. Supply side issues have eased. But would you still be concerned about these mass resignations that have happened?
Yeah, good morning, Sonia. There have been quite a few resignations in the past couple of years. It does kind of, to a certain extent, shake the morale of the internal employees as well, given that you do have new heads coming every now and then. But I think in such a large organization, they would be having systems in place for the transition to happen smoothly. Definitely, we wouldn't have liked the transition to happen much more smoothly than what we've seen in the last couple of years. But I think it will take some time to kind of for the overall management and the employee strength to kind of strengthen, because we need continuity in the business. Having said that, they have been pretty consistent on the new model launches, so that has not suffered. But we remain skeptical on the volume growth trajectory despite the new launches, given the intra-company cannibalization that we've seen for their historical launches.
And there are so many new launches happening in this space, right, in the two-wheeler space right now. So competition is also heating up. What do you do with the stock price now? It's hit a fresh 52-week high. It's had a great run. Would you be cautious at these levels, or if someone holds it, would you consider adding on?
Yeah, definitely we remain cautious on the stock. We have seen, in the last couple of years, there has been a slew of launches, say the Meteor, the Classic 350. However, despite those launches and initial response being very strong for those launches as well, the company hasn't been able to maintain the strong volume numbers on the wholesales and the retail side. somehow the strong order book has not been able to translate into commensurate retails and wholesales. In the last 4 months, we've also seen production constraints easing out. And to that extent, now you need to have wholesales picking up substantially with the new Hunter being launched. The new Hunter, we will be watchful of the demand. Initial trends suggest that demand has been encouraging, but that was the case in the historical launches like Classic 350 and Hunter and Meteor as well. How that translates into wholesales and retails in the coming months will need to be watched. The valuations are quite expensive, and given the delivery in the last 1 or 2 years on the volume side, we remain cautious on the stock, and in fact, we have a sell rating on the stock.
I have a sell rating on the stock. Coming back to the resignations then, Jay, what does this mean for the way forward as far as, the management is concerned? Because there is one argument that until Siddharth Lal is at the helm, one doesn't really need to worry because people come and people go, but the main ethos, the brand value, etc. remains intact. Would you believe in that, or do you think that because of these mass resignations, it could also affect the working of the company over the next couple of weeks and months?
No, it will definitely have some impact on the working of the company, but I don't see that as a very big, impediment, because eventually it's a brand in the consumer's mind which is well established. In terms of people do come and go, yes, that is one argument. One would have liked for the continuity of the management to remain. But given Siddharth Lal is there, I think he's at the helm. BGR is also at the helm, who's been there for quite some time in the company. The other, we recently had Yadvindra Guleria from HMSI also joining in over there. So they are replacing the exits with some decent names from the industry. It will take time for the new names to kind of adjust to the company's working. But one needs to really watch on the brand pickup of the new launches. That will be a key monitorable. I think these are minor glitches in the interim, which needs to be monitored.
Okay, so minor glitches in the interim. For now, the stock market doesn't seem to be too perturbed. The stock has been hitting new highs. So as they say, perhaps people come and people go. The business is doing fine. In fact, demand is picking up quite a bit, and it's reflected on the stock. But this is still a concern that there are multiple exits in Eicher Motors. Let's do one thing. Let's thank Jay Kale for joining in and take a quick break. On the other side, our special segment, It's the Economy. Lata will connect with Nathan Sheets, the Global Chief Economist, Citi, and Aditya